This video is a good explanation podcast during your morning drive to office. However, if you don't have time to listen to the full video, check out the timestamps because at the end we have given crisp, point-wise summary of what is explained in this video. Think about the items you use daily. You might drive a Tata car, brush your teeth with Colgate toothpaste, buy groceries from Reliance Smart Bazaar, or use an HDFC Bank debit card. Every single day you send your hard-earned cash to these giant corporations. But what if you could stand on the other side of that counter? What if instead of just being a consumer, you could become a part owner of these massive empires? Hello everyone and welcome to the Fintelligent Investor channel. I'm CA Pratiksha Pai. Every time millions of Indians buy a product, a tiny fraction of that profit could slip straight into your pocket. That is exactly what the stock market does. For most beginners, the stock market looks like a terrifying digital jungle filled with rapid numbers, chaotic green and red charts, and confusing financial vocabulary. Today, we are stripping away the complexity. Welcome to part 1 of our masterclass. Let's break down exactly what the stock market is using simple terms that anyone can understand. If you feel that my talking speed is slow, you can watch on a faster speed. The relevant timestamps are also given. So let's dive in. Let's start with the absolute base. What on earth is a stock or a share? Think of a giant company as a massive pizza. If the business is the pizza, a share is simply a single slice. When you purchase a share of a company listed on the stock exchange, you are buying a tiny slice of that business. Congratulations, you are officially a part owner or a shareholder. If you buy even one single share of a corporate giant like Reliance Industries, you legally become a minority partner in that multi-billion-dollar empire. If Mukesh Ambani makes a profitable business move, your tiny slice grows in value. If the business faces a loss, your slice shrinks a bit. You share the rewards and you share the risks. It is a real business partnership handled completely through a digital ecosystem. Now, why would a multi-billion-dollar company want to sell its ownership to normal people like you and me? Why not just keep all the profits? Let's take a quick look at this story. Imagine you start a local garment factory. It runs successfully and you decide you want to expand across the entire country. To build 10 new automated factories, say you need exactly 50 crore rupees. If you go to a bank, they will demand massive interest payments every single month, whether your new factories make a profit or not. That is a heavy, stressful risk. So you choose a different path. You split your company into small pieces called shares and offer them to the general public through an initial public offering or IPO. Millions of regular citizens pool their money together to give you that 50 crore rupees. In return, you do not owe them a loan. You give them a percentage of ownership. If your expansion succeeds, everyone gets wealthy together. Before going ahead, if you enjoy our content, please subscribe and hit the bell icon. We explain everything in plain, simple language, and we've got plenty more easy to follow videos coming your way. So, where do these shares get bought and sold? Just like you visit a local supermarket to buy your groceries, there are stock exchanges to buy shares. In India, we have two primary digital marketplaces, the BSE, that is the Bombay Stock Exchange, which is the oldest exchange in Asia, founded way back in 1875, and the NSE, which is the National Stock Exchange, which was launched in 1992 and handles the highest daily trading volumes today. You don't need to physically travel to Mumbai to trade. These institutions operate as vast digital networks. When you click buy on your mobile application, your order travels to these central servers in milliseconds, matches with the seller somewhere else in India, and completes your transaction instantly. If you already trade in stock markets, let us know in the comments which platforms you use to trade digitally. This is the part that matters now. Let's summarize today's fundamental building blocks. A share represents genuine fractional ownership in a live company. Companies issue shares to the public to raise capital for expansion without taking painful bank debts. The NSE and BSE act as highly regulated digital supermarkets where these shares change hands safely. The stock market is not a lottery system, it is a bridge that connects your regular savings to the real economic growth of the country. In part 2, we are going to demystify those two famous words you hear on the evening news constantly, Nifty and Sensex. If you found this useful, please hit that like button as well as share it with your friends and family. Stay smart with your investments, and I will see you in the next video. Till then, stay subscribed, stay connected. Thank you.